We're into the third quarter, 2022, and it looks like the indications show that we probably entered a recession the past 2 quarters, declining growth in GDP, the country's production. That's the official or the stated threshold for entering a recession is 2 declining quarters of GDP. We probably did that. The official number won't be out for another month or so, but indications are looking like the U.S. economy officially entered a recession 2022. Now, when that comes out, let's say a month from now, officially, we'll also be right in the middle of earnings season. Earnings season is every quarter where companies are announcing, updating their earnings projections as well as their current earnings conditions, their profitability, the revenue. They're giving the public disclosures on what they've earned, what their outlook for the future of their business is. And this can be compounded by the fact that we might get a recession announcement, official recession announcement around a month from now as well. That puts a lot of risk in my mind on what the stock market and potentially even bond market can do, but certainly the stock market over the next month or so, because if my assumption is correct that we probably entered a recession, and if other people are thinking the same thing, then they're also looking at it and kind of holding back on investing, expecting or being worried about the earnings reports coming in below expectations, bad earnings reports, and therefore a downward sign for stocks, because stocks are valued off of their future profitability. These are companies, and if the company comes out and says, we don't think we're going to sell as much in the next year as we did last year, that's a bad thing. Their price will go down. And if investors believe that that may happen, or there's a high probability of that, and there's a headline of a recession, it compounds it, and there is a higher risk that the stock market will see a decline in the next several months. I don't know if that's happening. We may have already seen that. The stock market is often 3 to 6 months ahead of the actual economy. And that might have been what we've seen over the last 6 months, is the stock market's dropped 20%. And that's simply saying, yep, we're slowing down. This is a recession. And the stock market, this non-human intelligence, basically was telling us a recession is coming, or we're in a recession. Either way, it's very possible. As an investor, it is not the time to double down and put all your money in the market, but it does make sense if you have cash on the side to start putting it in. And if it gets noticeably worse as far as the stock market price, another 10% decline or more, then you certainly want to accelerate that and really start putting cash in. It's long term. Don't swing for the fences on a short-term bet for cash you need 6 months from now. But if you have long-term money, it's a good year to be dollar cost averaging, putting it in. And if the market really overreacts on the downside, that's when you back up the truck and say, all right, let's put in as much cash as we can that we can stomach sitting there long term. I'm Justin Struble with BSG Advisors. I'm not a broker, I'm a fixer. Please subscribe to this channel, watch more of my videos. I love your feedback, and reach out to me if you have any questions.